All right, hello and welcome to another session of the My Solo 401k Financial YouTube weekly webinar series. We've got a great topic. We're excited to share it with you today. If you're on YouTube, please like and subscribe for more videos like this. You can also post questions in the comments on YouTube, and we'll field those questions after we get a chance to go through some of these slides that we wanted to bring and share. So today's topic is around Solo 401k reporting year-end checklist. So the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. As always, you can join us 24/7 in our community, mysolo401k.net/my-community. It's free to join. All are welcome. We have forums, for example, where folks are posting questions 24/7. We have multiple webinars per day, live Q&A sessions like this, where individuals will bring questions, we'll go over topics, etc. So there's a lot of great ways to learn and to share the knowledge. As always, it's free to join. All are welcome. So before we get into today's content, let's lay the foundation with some basic concepts, talking about some of the top Solo 401k benefits and features. For example, our plan allows for fast account setup and funding. And this is because of the fact that we prepare the documents within the same business day when someone signs up. We also allow you to open up accounts at the bank or brokerage of choice, so we're totally compatible. We've helped customers open up accounts at hundreds of different banks, many different brokerages. For example, the top brokerage option is Fidelity. And Fidelity has recently migrated to an online process, which has really streamlined the whole account opening process. And now accounts are opening based on experience and client feedback in as fast as one business day. So some of the top reasons that individuals would set up accounts would include the ability to make contributions. So a Solo 401k plan has the highest contribution limits for any defined contribution plan available to self-employed individuals. For example, for 2024, as long as you sign up by the end of the year, here by December 31st, you'll preserve the ability to make contributions for 2024 anytime up until the business tax return deadline, including any timely filed extension in 2025. So those contributions could include pre-tax contributions, which has the benefit of reducing your taxable income now, or it could include Roth contributions, which has the potential for tax-free growth, or it could be a combination of both. Another great benefit is that our plan allows our customers to maximize their savings because it's a low-cost Solo 401k. Some of those low-cost features would include the fact that setting up our plan will make the self-employed individual eligible to claim $1,500 in Solo 401k tax credits. That's $500 per year for 3 consecutive years, for a total of $1,500, which will more than cover our fees for the first 7 years. In addition, our plan is compatible with brokerage accounts, like I mentioned, such as Fidelity, Schwab, just to name a couple, where they open up free brokerage accounts, right? Schwab, Fidelity, the other brokerage firms do not charge any account opening fee. There's no maintenance fee. There's free online trading. It comes with a free checkbook. There's no asset under management or AUM fees. And our ongoing costs are $125, which is a flat fee that covers all the comprehensive Solo 401k compliance support at no additional charge. Another great benefit is that you can invest in what you want and what you know. So this could include, of course, typical brokerage type investments like stocks, bonds, mutual funds, ETFs, FDIC insured CDs, as well as true alternative investments, including crypto, real estate, private stock, private placements, precious metals, notes. Our plan is also easy to use. As mentioned, you can open and fund the account in as fast as one day. For example, Fidelity. Fidelity also allows for payroll integration with top providers such as Gusto, ADP, Paychex, Rippling, as well as other payroll providers. And then through those payroll providers, our customers are able to make automatic recurring contributions, and/or automatic recurring 401k loan payments. Our solo 401k plan allows for access to emergency funds, tax and penalty free. And this is because it supports a solo 401k loan feature. So with the solo 401k loan, the solo 401k owner is able to withdraw funds from their solo 401k, and it's not subject to taxes or penalties as long as it's properly documented as a loan. And we prepare the required loan documents as part of our service for no additional charge, as well as within those loan terms. For example, those terms are going to provide that the individual is going to be able to borrow up to 50% of their balance, not to exceed $50,000. That loan needs to be paid back in either monthly or quarterly payments, equal payments of principal and interest, with those payments spread over a 5-year term. The interest rate is either going to be prime plus 1% or a CD rate plus 2%. In addition, it's noteworthy that there's no credit check, there's no approval or underwriting process, so those loan funds can be accessed quickly. And of course, no loan fees from our perspective. Comprehensive support. Our annual fee is a flat $125 annual fee that covers all that ongoing compliance support for the solo 401k. So that's going to include, for example, unlimited free rollovers, mandatory plan updates and amendments. So as the laws change and the plan documents need to be updated, we proactively reach out to our customers to provide those mandatory plan updates and amendments. Form 5500EZ and Form 1099R preparation and electronic filing. So for example, once the value of the plan exceeds $250,000, our customers just need to let us know, and then we'll add their plan to the queue and prepare the Form 5500EZ. And we handle that under the electronic filing system to make it easy for our customer. Solo 401k loan document preparation. And of course, we're educating our customers on the solo 401k rules via phone, via email, right, with the daily office hour Zoom calls. As mentioned, we host multiple Zoom calls per day. You can find those links at mysolo401k.net/webinar. For example, we got the links posted already for Monday, for the two sessions on Monday. And then finally, of course, the educational resources. We have over 30,000 members in our community. We have active online forums. There's a library of hundreds of educational videos and webinars. We have the industry's first solo401k.ai chatbot to help our customers quickly answer questions and find resources. Solo 401k eligibility. So who's eligible to set up a solo 401k is going to be a self-employed individual. So that's an owner-only plan. In other words, the individual is self-employed and there's no non-owner, non-spouse, full-time W-2 employees working for any business owned by that person or spouse, if any. So think like an independent contractor, solo practicing professional, like an attorney or CPA or realtor. Some of the top eligibility considerations include whether or not the individual needs to have a formal legal entity for their business, like a sole prop versus an LLC or an S Corp. And the answer is no. There's no requirement to have a formal legal entity. We have many, many customers who operate their business as a sole proprietorship, and that's fine as long as they're reporting earned self-employment income on their taxes. That's what's important. So for a sole prop, earned self-employment income is going to be income reported on Schedule C. Or let's say your business is taxed as an S Corp. In that case, it would be W-2 wages that you receive from that S Corp. And then, of course, not having any non-owner, non-spouse, full-time W-2 employees. There's no minimum amount of earned self-employment income that needs to be reported in order to be eligible to set up a plan. Your spouse or business partner may participate as long as your spouse or business partner are reporting their own earned self-employment income, such as their own Schedule C or their own W-2. You could set up a solo 401k even if you have a W-2 job, even if you participate in your W-2 employer-sponsored plan, like a day job plan. Again, as long as you got that separate earned self-employment income. So again, you can find us every day in our community. You can find our links, the links to our webinars at mysolo401k.net/webinar. Please like and subscribe on YouTube as we also stream these sessions on YouTube, whether it's prepared content like today's content or just our daily office hour style calls. So now let's jump into the content that we wanted to bring and share. And if you have questions, please don't hesitate to chat those over. So we want to talk about year-end compliance. So year-end reporting. You can think of it like a checklist. So what are some of the issues that come up with a solo 401k at year end where there might be a specific deadline that needs to be met or a compliance matter that's driven by the year end? So first off, conversions. So what is a conversion? A conversion is when you have pre-tax money in your solo 401k that you want to move over to your Roth solo 401k, right? You want to convert it from a pre-tax status to a Roth status, right? The individual might have contributed pre-tax, made pre-tax contributions to their solo 401k, might have reduced their taxable income for 1 year. Like we talked about, one of the top reasons that customers set up plans with us is the ability to make contributions. And so if you're making pre-tax contributions, that's going to reduce your taxable income for the year for which the contribution is made. And then that money will be held in a pre-tax account. And then ultimately, when you withdraw the money, you're going to have to pay taxes on it. However, if you have a plan like ours that allows it, it's possible to convert those funds from a pre-tax status to a Roth status. Now, that means, of course, that the amount converted is going to be taxable for the year of the conversion. So that leads into the deadline. So if you have money in a pre-tax status that you want to convert to a Roth solo 401k status, that's going to be taxable to you. If you want to make it taxable to you, for example, for 2024, the deadline to process that conversion is December 31st, 2024. So process that conversion means you have to move the money from the pre-tax account to the Roth solo 401k account. So if you don't have a Roth solo 401k bank or brokerage account, one would need to be open in time to be able to process the conversion by the end of the year if you want that to be taxable income to you in the year 2024. Now, it's also going to be reportable. So a 1099-R has to be issued to report that as taxable income. So it's going to show that amount as taxable income to you. Now, we handle that 1099-R as an optional free service for our customers. We don't know if the customers need that or if they're doing conversions, and unless they submit our online forms. So that they just need to simply submit our quick 1-minute online form to add their plan to the queue so that we can prepare the 1099-R. So for example, if someone processes an in-plan conversion in 2024, they move the money from the pre-tax status to the Roth solo 401k account during 2024, they would just need to submit the online form and then the 1099-R to report that 2024 pre-tax to Roth conversion would be issued by February 2025. So that's going to be an important December 31st year-end reporting deadline that you'd want to add to the checklist. So next, in terms of conversions, is mega backdoor Roth solo 401k conversions. So what is a mega backdoor Roth solo 401k? Well, really, it's a plan like ours that allows the individual to make what are called voluntary after-tax contributions. So the voluntary after-tax contribution limit is higher than the Roth solo 401k limit. For example, the Roth solo 401k limit is really the employee limit. So for 2024, that'd be $23,000 or an additional $7,500 if the individual is age 50 or older. But whereas the voluntary after-tax limit is 100% of their self-employment compensation all the way up to the overall limit, right? Assuming they don't make any other contributions to the plan, like employee or employer, because the total amount of contributions made to the solo 401k cannot exceed the lesser of self-employment compensation or the overall limit. But assuming that the individual doesn't make any employee or doesn't make any employer, let's say they're under 50 years of age and they have the self-employment income, let's say they have a self-employed business taxed as an S Corp, let's say they receive at least $69,000 of W-2 wages from their self-employed business taxed as an S Corp, that person could contribute, if they got a plan like ours, $69,000 as a voluntary after-tax contribution. The next step would be to then move those funds from the voluntary after-tax account either to a Roth IRA or a Roth solo 401k. Now, the contribution deadline, as we talked about earlier, is the business tax return deadline, including any time they filed extension. So there's many individuals who are setting up plans here at the end of the year, but they're not actually making contributions for 2024 until their business tax return deadline, including any timely filed extension in 2025, right? So they might sign up now, open up the account sometime at the beginning of next year, make the contributions for 2024 next year. And that's fine, right? As long as they sign up at the end of the year and they make those 2024 contributions by their business tax return deadline, including any timely filed extension in 2025. And then that second step, of course, wouldn't necessarily occur until 2025, right? They would deposit to the after-tax account and then either move to the Roth IRA or Roth Solo 401k sometime in 2025, right? The reason that folks want to move it out of the after-tax account either to the Roth Solo 401k or Roth IRA is that any subsequent growth would be potentially tax-free, right? So if you have gains inside that after-tax account, it's going to be taxable. Those are going to be taxable gains. It'll be taxable when you move it out of the after-tax account, either to the Roth IRA or Roth Solo 401k. Of course, you do have the option to move it to the pre-tax account. But point being, if you move it to either the Roth Solo 401k or Roth IRA, then the subsequent growth will be potentially tax-free because now it's in a Roth account. So there is technically no deadline to move the money from the voluntary after-tax account to either a Roth IRA or Roth Solo 401k. The deadline is to first deposit it as a contribution to that separate voluntary after-tax account, but there's no deadline to move it out to either the Roth Solo 401k or Roth IRA. But with the pre-tax to Roth conversion, it's still going to be reportable when you move it from the after-tax account to either the Roth Solo 401k or Roth IRA. So customers use our online form, the applicable one. There's two of them, depending on whether you're going to a Roth Solo 401k or a Roth IRA, to provide us the information that we need to prepare the 1099-R. Because like the pre-tax to Roth conversion, we handle that 1099-R for the after-tax to Roth, either Solo 401k or Roth IRA transfer as an optional free service for our customers. All right, so that deals with conversions. So now let's talk about the 5500EZ. So the filing deadline is not until 7 months after the end of the plan year. So the plan year is going to end at the end of the calendar year, right? December 31st. But the value of the account as of the end of the year is going to drive whether or not a 5500EZ needs to be filed for 2024. So that begs the question, okay, well, how do I determine the value? So you have to look at all the assets and cash in the Solo 401k, looking at all the different accounts, right? If you've got multiple participants, like a husband and wife that are both participating, both working in the same business, or let's say you've got different types of funds, like pre-tax versus Roth, right? The sum of those accounts, including the cash, including any investments, including any alternative investments, needs to be summed up. And if the value exceeds $250,000, then a 5500EZ would be needed. Now, that would need to be filed, again, by July 31st, 2025. We handle that as an optional free service for our customers, preparation and via the electronic filing system. So if you fall into that boat, if your plan exceeds that $250,000 threshold, you can just simply email us at business@mysolo401k.net so we can get your plan added to our preparation list. Now, an important note here is if your business has a defined benefit plan, right? Some individuals have both a defined contribution plan, which is what a Solo 401k is, as well as a defined benefit plan, and that's fine. In determining whether or not that threshold has been met, you would need to add both the defined benefit plan value plus the Solo 401k plan value to determine whether the 5500EZ needs to be filed. Now, a separate 5500EZ is going to be filed, so you'd work with your defined benefit plan provider to file that 5500EZ for the defined benefit plan versus the 5500EZ for the Solo 401k, which we handle, again, as an optional free service for our customers. All right, well, so that takes us to the end of the content we wanted to share today. Please chat over questions, and we'll go through those questions sequentially. We'll give you a moment to start chatting over questions. We have one in the queue here. We'll get to turn to that first. But feel free to chat over questions or topics that you wish to discuss. Thank you so much. All right, thank you so much for the great question. Can I claim the $1,500 tax credit with my account, with my solo 401k that was opened in 2023? I don't want us to do another restatement. So if the plan was set up earlier in 2023, earlier than the end of December, then the plan would need to be updated because it's not going to include the features, the notices, the forms that would need to be prepared to make the self-employed business eligible to claim the credit. So if you go to our support page, you can follow the steps, etc., to have the plan updated. It would need to be restated, though. Great question. Thank you for bringing it. All right. Well, it looks like that might take us to the end of the questions for today. Thank you so much for all the great participation. Again, please continue to participate in our community, mysolo401k.net/my community. You can find our daily webinars at mysolo401k.net/webinar. So until next time, thank you so much.